What's up, YouTube? This is Don Freeman coming at you again with another one. Wanted to let everybody know, everybody out there in YouTube, that I finished my book, Investing in Dividends for Dummies, and was an interesting read. Some good information on doing your due diligence, things you need to do, like in checking up on the balance sheets on some of these businesses, um, being mindful of the taxes that you have to pay at the end of the year. And some of the last chapters in that book are talking about, some of the tax advantages that you do and you don't get. For instance, the mutual funds don't really have a lot of tax advantages. All the taxes through the mutual fund company is passed through to the person investing. And so at the end of the year, most of your investments are looked at as maybe a qualified tax. And so for a mutual fund, it's kind of hard to justify a lot of that, the cost and the taxes that go along with it. I also read about in that chapter, they were talking about the master limited partnerships. And one thing that I read about in there was you have so many of the companies that in master limited partnerships, dealing with moving of energy, gas, and different things. They work out of several different states usually. And so at the end of the year, you have a tax burden, which can be, paying state taxes to several different states. And so it all breaks it down when you get your K-1, which is a tax form, which is a different tax form than most all the other stocks. Most all the other stocks, you have a 1099 or a 1099 dividend form. And so it's, for me, it's better to just get that form and, use that form, because most of my ETFs, most of my stocks, most of my covered call ETFs, they all, give a 1099 DIV. So, you got to think about what's going to be advantageous to you when it comes to what you're going to be paying out, versus, people who put their stocks into a retirement account, which could be very good for you, being tax deferred for all those years. And then when you start pulling the money out, that's when you end up paying on your taxes. So, it's just something to think about. I look at it like this, that I don't mind paying taxes now for income that I'm reinvesting to get more stocks to boost my dividend income, because there's going to be a point in the future where I'll probably be using some of that income, and so I want to build it up really quickly. That way, even though in the future I'll still be paying taxes on some dividends. Now, one thing I wouldn't have to worry about is if I'm pulling a certain amount more than what my dividend payout is, the depending on what my gain is what I pay tax on, that is in that regard. But when it comes to the dividends, certainly I would think I want to have a income, say if all I needed was $1,000 a month. Well, certainly if I'm getting $1,000 in dividends through my stocks, I still would have to pay each year, whatever bracket I'm in, maybe it's 0, maybe it's 10, or maybe it's 15%. And so those are some of the things that I'm looking for in the future to take advantage of. Um, just wanted to give a quick update on what I'm doing this week. Um, what is today? Like the 20th or something, the week of May 20th. Um, I have one dividend stock that I know I'm getting a small payout from, maybe $3.50, $4 from my Orchard Island Capital, and so that's a real estate REIT, and certainly that'll be good to get a couple more dollars dripping into my account. But I'm looking to buy more of the stocks, which I think will be landing their dividends at the beginning of the month. Um, you know, I'm at that kind of point where those are the stocks I really have to look to build up on. Stocks like my AGNC, stocks like my EFAS, which is my ETF that deals with European stocks and different emerging markets. And because that one that does pay a nice yield right now. And so that's my strategy. I want to build up the stocks that will pay me in the beginning of the month. And of course, like I had talked about in my last video last week, I'm looking at the Apple cover call ETF from the high yield, what is it called? Yield Max. So, I'm still waiting. I've started buying it this month, so I still have, a couple more weeks to kind of see how that goes. I'll keep you informed, but I want to, right now I think I have 4 shares of the Yield Max for Apple, and then I want to add to it. I want to continue to add to that one because I want to see what type of dividend I get for that first dividend, because if it comes out the way everybody's reporting about it, I might just begin making that one that I always add to every week. I got, again, a lot of my dividends that are going to pay me the most are at the end of the month. I have Devo. I have XRMI, which is another cover call ETF. I have the YYY. That'll pay me at the end of the month. I have I forget the ticker symbol, but I have a small cap that covers a whole bunch of the small cap companies. Will pay me at the end of the month. And then I have the Jeppy, which Jeppy has a high yield. I only have 2 shares of it. I'm looking to buy more of it. But the problem with Jeppy is they give you their ex-dividend date, I think like around this time, like maybe near the end of the month. So you have to own it, near the end of the month, and then you only get the yield or the payout, right after the first of the month, which is a month later. And so, I'm trying to, decide, being that it's a $50 stock, should I put that much money into buying Jeppy right now? That's, something I have to decide, because, just the weight in itself is kind of something to think about. But, yeah, if I can get stocks that, give you your ex-dividend date, and, if the payout is a week later, 2 weeks later, that's fine with me. That's something that's easier to track. You want to have something that's easier to track, You know, when you're in your investing portfolio, you want to be able to go on sites like Yahoo Finance or some of the other ones and be able to look up the dates and you know, kind of see where the overlap. You want the overlap to be something that you can anticipate. That's one thing I'm trying to anticipate is have stocks drop at the end of the month or the first of the month. You know, I have my AGNC. I want that. That's dropping like maybe around the 6th or 7th of the month. So that's definitely one that I'm going to have to build back up. And then I have maybe 3 stocks or ETFs that drop near the second week, maybe around the 12th or the 15th. And then again, Prospect Capital, which it just gave me a dividend, couple dollars. I need to build that up some more, but that's my stock that finishes out on around the 3rd week of the month, maybe around the 20th or the 17th. I think this month it was on the 17th or 18th. And so, you know, those are some of the things that I'm trying to get in order so that at the end of this year, I want to have dividend payouts that are considerable, that I'll be able to buy a stock each week. And, you know, that compounding effect will be hitting me and moving in really quickly so that I can go into 2024 with an outlook and maybe an estimation on, you know, if I continue on the way I am, I'm, you know, putting in at and around like maybe $80 to $90 a month right now. Last year I was putting in more. I was putting in as much as I can to get started, and I kind of ended the year out putting in maybe 100 a week. And then of course, you know, I had the problem with my digestive tract and had to go to the hospital. But, you know, with payouts of, you know, several dollars every week, you know, I can basically add less and still continue to buy stocks. So those are some of the things I was thinking about on a beautiful Sunday like today. I'm out here at Clark State Community College, one of the places in my neighborhood that as a kid I used to like to come out here, and some of my friends we used to come out here, you know, just to get away from the neighborhood. But yeah, those are some of the things that I wanted to talk about. Of course, I'm continuing to watch all of my YouTubers. I just want to, again, give a shout out to them. You have Average Joe. He's a very good YouTuber who, again, if you want to see some reviews on his portfolio, which shows a lot of different stocks and gives a lot of different breakdowns on how well the stocks do, he's very good at that. There's Jason Fever. There's Dividend. I think his is called Dividends and Income. There's Dividend Bull, and then can't think of my other guy here. I'll think of it on the next video. But having some guys to review and look at stocks is a great way of, you know, getting some information on different companies. Again, a lot of them are doing stocks that are quarterly stocks. And so that's just one thing to think of. I'm not at that point yet where I want to own a lot of quarterly paying stocks, because, you know, certainly you can get some quarterly stocks that as you line them up, you can get payouts, you know, almost on a weekly basis. But, you know, that's a lot of money invested and a lot of money spread out for payouts that, to me, I think you're waiting a good while and seeing a lot of stock movement. You know, I think that is kind of a risk that no one talks about. I would rather get the payouts into my hands so that I can put it to good use as fast as possible. So those are some of the things I wanted to talk about today. Um, Again, like I was saying, I used some of my tools from Robinhood. I had just added a couple more companies that I know that from my job that, we service so many different companies at AirTrim that I found their ticker symbol and I put it on my list. That way I can watch them. I can see what type of growth or what type of different information you can get online, because certainly you can go online and look at the balance sheets on all these publicly traded companies. And that's one thing that the book was saying near the end of the book in some of the last chapters is you want to read the balance sheets, learn how to do, you know, uh, do the calculations on different things like PE, uh, price to earnings, and then, also price to returns on your assets or on your investment. And then another thing is they talked about when you're dealing with mutual funds or any type of investment where somebody's investing for you, it's always better to have a fiduciary. Um, if you have somebody that's not a fiduciary, they're going by, commission or, fees. And so you want to kind of keep that down. You want to keep the fees down. You want to look at the fact that if somebody gets paid for everything that they sell to you or that they do for you, then to get paid, it's better for them to make moves. And one thing about it is, on a lot of them, you can set it to where you can tell them, hey, I don't want you to make any moves unless I, tell you to make some moves. Because if you leave it up to them, they're going to make as many moves in the market as possible to build up as many fees as possible. So, yeah, those are some of the things to think about. I just wanted to say, about to get out of here, if you're not subscribed to my channel, if you come across my channel, please subscribe and give us a like. That'd be very helpful for me. And, leave a comment. I go over my, YouTube comment sections. Anybody who leaves a comment, I'll reply to you. If there's information that you're looking for, I'm not scared to go on and do some research, because heck, that's what life is. Life is about information. It's about learning, and it's about, bettering yourself. It seems like you got people who, all they tell you is to go to college, get a degree, then jump out into the workplace. But then when you find out, you get out in the workplace, all that researching, all that learning, it's not over with. You're going to find that for, most jobs, for most degrees you get, you got continued learning, you got, licensing that you have to get renewed, and then you have, researching of your sectors, of your different industries that you have to continue to do. And so, it's a non-stop struggle. So yeah, I'll let you guys go. I'm going to see you on the next one. Thank you and have a great day. Bye.